Building a good trading strategy can be very complicated. And a lot of the times when you're trying to use smaller time frames for entries in order to minimize your stop losses, it can be a little bit complicated if you're a new trader and don't know how to navigate this. But in this video, I'm just gonna make it as simplified as possible in order not to complicate anything. So first thing you have to know is if a point of interest comes from a monthly time frame, it's a high probability trade setup. An example is gold right here. Our point of interest is this fair value gap right here on the monthly time frame. This already is telling me that if we should potentially see a reversal from this point of interest, it's going to be a high probability trade setup. And this will give me the confidence when I see a break of structure on smaller time frames like 5 minutes, 15 minutes, more specifically 15 minutes time frame. I'll be confident to look for buy trades to continue higher. So now that we've outlined our point of interest being this monthly fair value gap, the next thing we now want to do is how are we going to get those 15 minutes entries and 5 minutes entries in order to reduce our stop losses? What we do is we start to scale down time frame to time frame. And scaling down time frame to time frame, you can see on the weekly, there's also a fair value gap on the weekly here, and also another fair value gap on the weekly here, aligning with that monthly fair value gap. You can recall that the monthly has just one fair value gap, but now the weekly has two fair value gaps, still at the same position. So when price comes down, mitigates this key level, we'll be looking at 1 hour to break and 4 hour to break for us to confirm a shift in market structure from this key level, and any retest will look for buys to continue higher to run these highs. But in the meantime, this is our overall direction. If we see a 4 hour, 1 hour significant break of structure, we only focus on buys. But in the meantime, if we're looking for trade setups using those smaller time frames, we don't really need to wait for 1 hour break of structure and 4 hour break. What we do is we scale down to daily time frame as well. Looking at inside that same point of interest, the monthly, we want to see the fair value gaps on the daily. And on the daily, you can see there's a fair value gap here, right here, and another one right here. So all we want to see if price comes in down in here is a 30 minutes break of structure. Why? We count 3 time frames to the left, 1, 2, 3. So the moment price is in here and in here, if we see a 30 minutes break of structure, we look for a buy. So we'll go straight down to 30 minutes. And you can see on the 30 minutes time frame, there was no break of structure until when we went down here. And the moment we went down there, you can see we have a significant high. So let me make this a different color. Have a significant high and another significant low right here, giving us a telltale sign. This right here is a high, a low. The moment you see a break of structure right here, our focus is going to be on a retest. The moment you see price break above this high, we want to see a retest. And what do we want to see price retest? Either the last down close candle or a fair value gap. And right here, we have the last down close candle resting right here. That'll be a perfect area for us to look for retest. And you can see how nicely price came in there, mitigated it. Right here would have been your beautiful entry stop loss right here. And if you wanted to have a smaller stop loss, what you do is the moment price mitigates this position, just count 3 time frames to the left, 1, 2, 3. Wait to see a 4 hour break of structure right here. After mitigating here, wait to see a 4 minutes, not a 4 hour. The moment we mitigate here, wait to see a 4 minutes break of structure from this key level. And right here, take it back. Another thing I wanted to show you here is if you go to 2 hour time frame, you can see after that break of structure on 30 minutes, we left this fair value gap. You can literally use the fair value gap, the open of this fair value gap as an entry stop loss here, and that would be first entry. I personally would prefer using that last down close candle because it's going to reduce your stop loss. And my target, I'll just target this key level is a 1:3. The moment we're mitigating this position, I'll look for a re-entry, second entry. This right here is the first entry. I'm going to show you the re-entry, and that is waiting for a 4 minutes break of structure. And you can see right here very clearly we have a significant high, significant low, break of structure. After this break of structure, I want to see a retest to buy. And that retest, what are we going to retest to? You can look for fair value gaps, or you can even look for either fair value gaps or the last down close candle. And the last down close candle in this case, you can see the last major down close candle is this one right here. Right here is the last major down close candle. You can use that as your entry position. And the moment price mitigates it, you get in this low stop loss target, same area, 1:3.35. So 2 trades, 1:3, 1:3.35. Now I'm going to show you a third entry as well. The moment price is in here within this yellow zone, whether it's mitigating in here or below it, you're still looking for another 4 minutes break of structure. So let's go to 4 minutes time frame. And right there, all you do is you be patient and you wait for price to come in. And right there, you can see how price is just playing around in that position. Came in, dropped, came in, dropped. Now you can see how nicely we created a high, created a low, broke structure. The moment we broke this structure right here, you can use this fair value gap or this one here as an entry. You can literally have first entry here as first trade, and you can also have another entry here. Stop loss. Your stop loss can be this low, but in this case, I personally would recommend you add an extra 2 pips or 3 pips to it, just in case of slippage, because now you're working with really very small time frame. Take profit, same position right there. And then let's see how that goes. And trader stopped you in expansion, and you can see first entry, second entry, third entry, all in profits. Your first entry is 1:3, second entry 1:3.3, and your third entry is 1:22. Adding all of them is a 1:28. And as you can see, price is close to take profit position, and right there, very close to take profit and smashed. So you can see this is beautiful how you can reduce your stop loss, have multiple entries just in one trade setup. So if you have any questions, feel free to drop it in the chat.